Welcome to Almost Here, Round the Corner Future Technology podcast with Richard Jacobs. Future technologies poised to transform our lives for better or worse are the focus of this podcast. Almost here means these technologies are now here and starting to be used, or just around the corner, from Bitcoin to artificial intelligence, 3D printing, blockchain, virtual reality, and more. What technologies have you seen that the insurance industry is most resistant to, and which ones is it open to adopting?
I think, let's take those. That's a great question, Richard. Let's take those in two areas. First of all, when they see it and they see it proven, do they grab? I think that's the move from core systems, back office systems, inagile, aging, expensive, and moving those to the cloud. So core to the cloud. They're like, it really is as good as it was on the core, and better and more flexible. So, and often do it at a dramatically reduced cost envelope. So they're achieving greater flexibility at lower cost. When they see that and they see it's proven, and their techie guys crash to the ground with vulnerability testing and performance testing and security testing, and it passes, and often it passes better than their core systems, and they start to look at broader adoption of that. That they struggle with two areas that you and I, feel will have their day. Blockchain is so attractive to insurers because when they get that it's a ledger technology, they're thinking, we're a ledger industry. we record our contracts here and our debts there. They get that. The challenge we had a big blockchain initiative 2 years ago, and I'll explain at the end of this where we ended up. The challenge we have in blockchain at the moment is there are very complicated, connected processes around an insured product that need lots of processing, and blockchain starts to not become most effective way to manage a complex set of business processes: underwriting, claims, authentication of claims, payments of.
Is it because it's not fast enough? Is it because the security speed trade-off is too great, or what is it?
Just there isn't the development environment to give you that level of functionality in blockchain. It's good at storing, and then it's good at storing for a short period of time, where the actors and actions on the blockchain are fairly straightforward. So we've ended up in a position, and there are a few other players in our market, where the current application of blockchain works very well, we feel, for ultra short-term insurance purposes. So where the example we have built, floated around the industry, is Flight Assure, where at the gate you take out a policy, super cheap, maybe $1 from New York to San Francisco. You take it out and it's triggered by the flight taking off and closed when the flight lands. And the flight not landing triggers another more manual process to then explore what has to happen and if any debts are due. So that paints a picture from a blockchain point of view that it's good if you've got a simple transaction that has a clear set of rules that then happen over a short period of time. But insurance, you'd be making any longer term insurance, you'd be making premium payments into it, regular payments. Each of those would have to be administered and there'd be a cost. But also you might be making decisions about the product and the risk of the product, which equally would need to be factored in. And the truth is that there are applications that are quite well established that don't cost a lot, that do all of that quite well today. So we see that will change as the blockchain development environment matures. But today, ultra short-term policies seems to be the best use.
Is there any way to still use blockchain but keep most of the systems running in the cloud, but blockchain just secures them so that for security and compliance the whole system can run?
I can see technically the attraction of that. My barrier, not my barrier, but the barrier I see amongst the insurers is there's a lot of sensible applications of blockchain would need industry-wide collaboration to determine the security protocols, for example. And that's a challenge. The insurers don't tend to work together on long-term protection and investment products in that way. They work together well, and indeed regulators and governments help them define standards in transaction-based finance, so share trading, bank account interfaces, open banking. But we haven't got open insurance. That's a long way down the track. So any collaborative use, I'm not seeing any uptake for that. I do, however, see that there is interest where the contract for an insured life could be stored in cheaply, efficiently, and very securely in blockchain. That's an interesting view where the blockchain simply acts as the almost replaces the paper contract that previously existed. That's an area that I see some of the insurers considering. But then they'd only be using it for, that would be they would only have to worry about that themselves. It wouldn't be something they'd have to liaise industry-wide on.
So what are some of the first steps towards transforming the insurance industry and bringing it into the modern world? If there's not a development environment for blockchain yet, what's the first steps? What to do?
I think the first step, and I would say this, wouldn't I? And we've played to this, is you need to experiment. You need to start becoming familiar with the technologies in a secure innovation sandbox type environment. We offer a service called AI Lab, which we've set up in government-sponsored innovation sandbox at Here East in the old London Olympic Park. It used to be the comms building, and of course it had such high-powered, sophisticated comms coming into it. they thought they might as well use it for something else, so they turned it into a tech hub. Bizarrely, it combines both insurtech, fintech, and sport tech. So we have BT Sport in our building, which is the UK sports broadcaster. So by identifying either internally, so I think the challenge that you could look at many of the tier 1, tier 2 insurers, and they've set up insurance hubs. The challenge they face is getting insurtech techie partners to work with them. What's the deal in terms of anything they co-create? Does that get owned just by AXA or Allianz or Aviva or the Pru? Or, does the tech company have the right to go out and sell it? And I've heard instances where the tech companies go out and take this whizzy tool they've built to another insurer who, when they find out that it's being co-funded by a competitor, throw them out of the room.
Okay.
So I think people need to think.
Gotcha.
I think people need to think carefully about how they engage with independent innovation hubs who can introduce them to a variety of players who perhaps will be more accommodating, willing, and helpful if they feel a certain distance from the insurer. They're not going to get gobbled up by one of these monster players. But then, of course, a few people have an exit game that they might happy to sell to one player. But I'm thinking from the industry point of view, sponsoring independent innovation hubs, I think, is the way that they'll crack through these barriers of adopting blockchain and AI. Perhaps, Richard, we could talk about AI.
Yeah, I figure if they won't adopt cloud computing, what hope is AI, but maybe you could operate it in the background for them. So, what are you looking at in that endeavor?
Well, the beauty from an AI point of view of insurers is they are awash with data. They have historical data. They have, say, a million policies, all with lots of details around what's happening against the policy. And yeah, they are in the land of big data. They all believe in the law of big numbers, and they all want there's consolidation. There's people buying up closed books, so you get very large blocks of data. The barrier we've seen over the last 12 months to genuine endeavors with AI is GDPR here in Europe, and I'm sure there are similar compliance concerns elsewhere, where people are scared stiff about how they use even the data they've got, not sure if they have the right to use it, and indeed not sure to what purposes they can use it, which AI falls firmly in that camp of it's going to do some complicated stuff to personal details. So I think we're in almost a phony war at the moment, where there's a lot of interest in what AI could do, but people are anxious about its adoption for fear of falling foul of regulatory concerns when people start to see what they're doing with their data. And I think you can see instances of that in elsewhere in the industry with social media networks and so on.
Well, so right, insurers are awash in data. They've had it for decades, which is amazing. They use it internally, certainly, for their own actuarial tables, et cetera, their own risk assessment. How do you see AI interfacing with them? Are they going to, jealously guard their data like a snarling dog, but maybe you could use AI to help them somehow? Or do you see their data somehow being anonymized and freed up to be shared amongst insurers?
Oh, that's a big call. I don't see insurers working together, and I think they are discouraged from working together by their regulators. There's a view that if they did, it would be to the detriment of the consumer. So I think just when that use of large sets of data, and as you point out, it could be in an anonymized fashion to spot trends and provide better goods and services to policyholders, that's not happening. So I'm a bit of a loss as to what will be, as some of the big banks are saying at the moment, regulatory oversight, and it's how stern it is goes in waves. And I think we're just at the peak of a wave of people feeling, as we hear from several of our clients, they're simply not going to launch new products until they feel more comfortable that they're not 10 years down the line going to be pursued for mis-selling and some sort of regulatory claim. So the use of AI, I can see how it could happen, and we'd like to run innovative trials for people, but I can't see collaboration, and I can see less and less use of, say, public data. Here in the UK, of course, we've got the unbelievably valuable NHS data set, which from a life insurance point of view is gold dust. But I can't see that the voting public are going to allow that to be shared in the near future. So sorry to paint a bleak picture on that, but I that's how I see it in the industry at the moment. So they're going to have to seek their cost savings in other areas, not from the exploitation of AI.
All right. Well, so how are you choosing to position your firm and to work with this industry? I mean, it sounds like you picked a very tough thing, maybe for the pride of working with like the toughest creature on earth, but what's ahead for your company for the next 6 months or a year? How are you going to wrestle the bear?
We are making great strides with AI Lab. That's proving popular. I think this idea that people can come out and dip their toe in the water. Because if we take it away, perhaps we would. You and I had in mind the large data sets that would really help drive AI. But if you just want to look at how rules engines might help people produce more cost-effective processing for their current activity, I think that's what people want to start experimenting with. They also see that, as I said earlier, this move to the cloud. So we see a lot of interest in people wanting to see how secure, how agile a cloud offering could be for some of their core policy administration. So we see that I think, Richard, if I can be candid, we see that as seeing us through until the AI question becomes clearer.
Okay. So what you talked about making rules for decision making, again, possibly migrating to the cloud. So you talked about the savings club for kids, how people can contribute to it, which is great. What other products do you have in mind that you could talk about?
We recently launched, and this is an example of how agile you can be and how rapid a cloud-based service can be. We took over a project from another vendor who had spent a couple of years not able to put in a bank assurance distribution network. They contacted us, and just 7 weeks later, we had their bank staff in their bank client able to raise illustrations and issue contracts. So that has astonished some of a lot of the, and when we tell this tale to other insurers, they're astonished that people can so quickly get a new product out, have it illustrated, issued, and then administered. So I think that's quite a dry subject for many, but something that I continue to see insurers sit up and listen. They're like, wow, 7 weeks. And then it's like, show us.
Okay.
Another area that we're pursuing, you mentioned over the next 6 months, and this is probably the most important area for us over the next 6 months, is we see across the industry, and I think there would be examples of this in other countries, we see particular use cases, as you and I would call it, where the one I'm going to refer to is the Child Trust Fund here in the UK. The government came up with an idea that all children should have a savings pot that was available to them when they were 18. Great goal. And over a few years, over 6 million of these were issued. Well, they're now coming up to 16. In fact, in September, the very first policyholders reach the age of 16. And at 16, they can take control of the policy. They can move it to another provider, but they can't take the money out. At 18, they can take the money out. Now, most of them will still only have the original government investment, which is now about $1,000 in their account. But you're an 18-year-old, and suddenly you're presented with $1,000. Richard, I'm not sure what you and I would do. Well, I think we'd probably take the money. So
you blow it. Yeah. Go out drinking.
I'd love to grow it, but no, I think I'd have bought something for my car or something. But
no, instead of growing it, I mean, you'd go out drinking, you'd blow it.
Oh yeah, you'd reinvest it. So what we're seeing is that's a hell of a lot of processing for people who've just run a very dormant policy. It's done nothing. Nobody rang up. Nobody did anything. They just earned money for looking after it. Suddenly they're facing over the next 5 to 8 years a whole tsunami of these policies coming through. Some people are going to have thousands of these a day, where let's say 90 to 95% of them just want the money. That's insurers are going to have to hire offices full of people to process these things. So we're taking our smarts and creating a imaginatively called CTF maturity platform to automate straight through process as much of that, use apps that the young adults, children originally, can use to interface with their policy, press buttons to make decisions, try to encourage them to invest if at all possible, but recognize if they want the money, we want to do that as efficiently and speedily as possible. So we're seeing those sort of use cases occur where we can take our agile cloud-based platform and provide a service which people rent, because of course they only need this for a period of time, to get them through this administrative challenge.
Okay. Well, very good. So what's the best way for interested parties to get in touch?
We have a web presence, which is nice and colorful, at www.ai-london.com, and I'm more than happy for people to contact me directly. Would my details be on your podcast?
Yeah. I mean, we can. You want to point them to a website, or what's the best way for them to get in touch?
Yeah, come to us through our website. They can fill in a form, and we will be all over them.
Well, very good, Andrew. Well, thanks for coming. And as with many things in life, I'm glad that some people are willing to tackle them. Tough things like you.
Yeah. So, thank you.
You have been listening to Almost Here, Around the Corner Future Technology podcast with Richard Jacobs. Subscribe to this podcast, post a review to discover more future technologies that are poised to transform our lives for better or worse, such as Bitcoin, artificial intelligence, 3D printing, blockchain, virtual reality, and more.